Today I'm going to talk about an important topic for homeowners who rent out properties on Airbnb here in Canada. So there's been a recent update that could hit your pockets pretty hard if you're planning to sell that property. So if you're an Airbnb host or you're considering selling your short-term rental property in the near future, this video is for you. Hi there and welcome. For those of you that don't know me, I'm Sonia Ramgobin, realtor with RE/MAX Rural Properties, servicing the Durham Region and GTA. So let's dive right in. So recently, the Tax Court of Canada ruled that properties consistently rented out on short-term platforms like Airbnb and Vrbo will be subject to HST upon sale. So this new regulation applies to all property types. That's condos, townhomes, or single-family homes, as long as they're regularly used for short-term rentals, which can be defined as being rented out for less than 28 days. So the tax implication also extends to rentals that come fully furnished with utilities included, or if the property operates with a hotel-like business model. Keep in mind that this rule does not apply to occasional rentals. So for example, if you're just renting out your property short-term, maybe once or twice a year, you're likely in the clear and this rule does not apply to you. However, if you're running your short-term rental more like a business, meaning you're renting it out regularly, then this is when this tax will apply to you. To make this a little bit more clear, let's look at a recent example. So an owner purchased a condo unit as an investment property in 2008. Initially, he was renting it out as a long-term lease for about 9 years. After this period, he switched to short-term rentals on Airbnb for about 14 months. When he decided to sell the unit, he was informed that because the property had been operating in a manner similar to a hotel, it was now subject to 13% GST/HST tax. As a result, the owner had to pay over $77,000 in HST GST tax. So based on this real life situation, this type of sale can cost you big time if you're unaware of the rules. With that being said, let's talk about what you can do if you are in this particular situation. So here are a few things to keep in mind. Number one is understand your classification. So it's recommended that you check with an accountant or financial advisor to see if your property is likely to fall under this business use classification. There are specific thresholds that determine this, so getting clarity on your individual situation is essential. Number two, plan for additional cost. So if you have no choice, if your property does meet this criteria, make sure you're financially prepared for the possibility of an added tax expense during the time of sale. And finally, number three, maybe consider holding off selling. So if this tax might impact your financial gains too heavily, it might be worth considering other options, such as holding onto the property a bit longer or switching it to a long-term rental in order to avoid additional tax classification. So to recap, this new rule emphasizes the importance of understanding the tax implication for owners using their properties for short-term stays. Understanding these tax implications can now help you make a more informed decision about your property. With that being said, based on these changes, it would be in your best interest to work closely with a financial advisor and tax professional to know what to expect and how to protect your specific investments. Well, I hope this video was helpful. If you know anyone that might benefit from this information, please feel free to share this video with them. As always, thank you so much for watching, and I'll see you in the next video.